Good morning and welcome to Medicare Made Simple with Medicare Myriam and her co-host Tracy from Smart Caregiving. Medicare Made Simple is brought to you by United Insurance Experts. Call today 561-464-CARE. That's 561-464-CARE. Now here are Medicare Myriam and Tracy with Medicare Made Simple.
Good morning and thank you for tuning in. I'm your host, Miriam Leyva with United Insurance Experts. United Insurance Experts is not affiliated or endorsed by the government or the federal Medicare program. We don't offer every plan available in your area. Currently in Palm Beach County, we represent 10 organizations which offer 49 products in the area. Please contact Medicare at 1-800-MEDICARE or Medicare.gov to get information on all of your options. The purpose of the show is to educate you on Medicare and to connect you with valuable resources. My co-host Tracy Lamb will be absent today, but I'm pleased to introduce our special guest, Garrett Basalyga from Muntz Financial, LLC. Garrett is the Director of Insurance and Client Services at Muntz Financial, LLC. Before joining Muntz Financial LLC, Garrett began his career with Penn Mutual Life Insurance at their advisory office in Philadelphia. Garrett has more than 15 years of experience in the insurance industry, providing advisory services in crafting suitable life, long-term care, and disability solutions for his clients. In his role, Garrett consults numerous business owners, individuals, and advisors on building wealth, transfer, and risk management strategies for clients. These strategies for individuals are based around family protection, tax, and estate planning. For businesses, his team helps owners with businesses continuation, succession, buy, sell agreements, group benefits, and executive bonus plans. So without further ado, let's welcome Garrett.
Hey, great to be here, and I appreciate the invite.
Thank you. It's a pleasure to have you. So let's start. I know I kind of went over a little bit about you, but tell us in your own words a little bit about you.
Yeah, so kind of my background, I'm born and raised from Philadelphia, moved down to Florida like a lot of COVID babies about 3.5 years ago. Grew up only child. My dad passed away when I was young, so kind of getting in the insurance industry was one of those things never thought would happen to me, but I was able to really relate to clients on how protecting your loved ones and your assets can kind of really make a transition in life that can be sometimes difficult a lot easier. So here I am, 15 years later, still doing it and still helping people and help to, move forward and continue that process and that, helping the individual and the businesses for the next couple decades.
Wow. So are you licensed here and in Philadelphia?
Correct. Yep. So I am licensed in all, I shouldn't say all 50 states, even though I'm able to do 50 states. I'm currently licensed in Florida, Pennsylvania, New Jersey, Colorado, and Texas. But we have clients all over the country that we're able to help.
Wonderful. Now, I know today we're going to be learning pretty much a little bit of everything, a little basic insurance information, life settlements, long-term care, and Secure Act. That is something that I've never really, I'm familiar with long-term care and life settlements, and of course, basic insurance information, but Secure Act I'm not that familiar with. So why don't we start with that? Tell us a little bit, what is the Secure Act and the Secure Act 2.0?
Yeah, so back in 2019, Donald Trump signed in the Secure Act, which is the Setting Every Community Up for Retirement Enhancement. Basically, the legislation was to make retirement planning more accessible for individuals and by their employers. So a lot of the basics of the legislation were creating tax incentives and tax credits for employers and individuals to participate in their 401k plans and other employer-sponsored plans. But really, one of the things that came out of the Secure Act was what do people do with their monies during retirement and passing it on to the next generation. Previously to the legislation, individuals who passed money from their 401ks and IRAs onto their heirs, that individual or trust or entity was able to stretch those monies out to their lifetime, their life expectancies. But with the Secure Act, they eliminated what was called the stretch IRA and created the 10-year rule. So that's really probably the most heavily affected, or I should say heavily part of the legislation that people focus on.
I see.
And the reason for that is everyone leaves money to their beneficiaries in IRAs because outside of your primary residence, employer-sponsored plan and 401ks, IRAs, 403bs are typically the biggest savings for an individual, biggest part of their wealth.
I see. So this kind of applies to someone that probably already owned a Roth IRA or an IRA. And how about if they didn't know about the Secure Act?
Yeah, so I mean, to be honest, there's still a little finagling going on. And what I mean by that is people are still trying to understand, are they eligible to have the stretch IRA? Because if you inherited those monies prior to 2020, you're eligible to use the stretch IRA. But after that, you are affected by the 10-year rule. So even the IRS has come out and postponed penalties or eliminated penalties for individuals who didn't take money out because there's still kind of a give-take there from the administration and the government to individuals when it comes to, hey, was I supposed to take money out each year based upon what's called a required minimum distribution, or do I just need to take all that money out within a 10-year period? So, yeah, I mean, there's still some learning curve going on, but it's one of those things that any part of the planning process, there's going to be a couple bumps early on, and that's, you live and you learn, and as people go on with their savings and their planning, everyone will figure it out. That's one of those things.
Now, is there like a solution to address the 10-year rule that eliminates the stretch IRA?
Yeah, so our team and a lot of other advisors out there across the country have really been addressing this topic with their clients because one thing a lot of people want to do is leave a legacy to their kids or a church or a foundation. And a lot of times they don't want monies to be lost from a taxation standpoint. So one way to do it is people have been discussing what's called a Roth conversion because typically when you are in your retirement years, you have surpassed your peak earning years. So your tax rate is lower. So if you were to convert the monies from a qualified account, which let's think a traditional IRA to or a 401k into a Roth IRA, which is post-tax, if those monies were inherited in a Roth IRA, even though you have to take the 10-year rule, you already paid the taxes on it. So the taxes that your children or beneficiaries would have from the Roth IRA are already paid. So they're just taking really the principal and gains. They don't have to pay the taxes. Versus if they inherit it in a traditional IRA or a 401k in that nature, then they're paying any withdrawals at their tax rate. So typically think about if you're, a daughter or a son, you're usually inheriting money when you're in your 50s, mid-50s, and those are really your peak earning years. So you're at a high tax bracket versus your loved ones, your mom, dad, their tax bracket typically is lower.
Right.
So that's why there's some important planning to do there. So you're not paying more in taxes that you really shouldn't have to.
So this is extremely important to get definitely your education on.
Yes.
For sure. Now, what's the best number to reach you at?
Yeah, so our firm, you can call me at 215-283-1933.
Okay, so 215-283-1933.
Yeah.
Now, are groups exempt?
Yeah, so that's kind of one of the things that's a beauty. So a lot of people say, hey, my wife's my beneficiary, my kids are my beneficiary. Well, with this stretch IRA being eliminated, it's actually more beneficial to leave to your spouse than your children. So, and the reason I said it is when you are leaving monies from an IRA to your spouse or someone who is disabled or has chronic illness, and there's a few other exempt groups, they are exempt from the 10-year rule. So they can, if say, you're 70 years old and your wife is 60 years old and you pass away at 80 and your wife's 70, she still has her whole life expectancy that she can spend down, those assets or do planning for herself to leave to children. Versus if you leave it to your children at 30 years old and they get X amount of dollars, that could have different tax consequences and investment purposes. And I would like to also frame out, we don't offer tax advice or investment advice.
Okay.
Please consult, your advisor, investment advisor, or tax consultant to make sure, you're handling that properly.
Okay. Well, thank you for that. And if anybody has questions about the Secure Act or would like to learn more, you could definitely reach out to Garrett at 215-283-1933, or you're welcome to call United Insurance, and we'll be more than happy to connect you with Garrett. And our phone number is 561-464-CARE. All right. So let's jump to one of the questions that I get a lot. It's long-term care. Now, this is a big thing, and it's a big issue because a lot of people don't get long-term care at the right time, it seems, or they don't get that education at the right time, right? So let's start in your words, Garrett. What is long-term care?
Yeah, so I mean, long-term care has been around for many of decades. I think it's become more prevalent in a generation that has become older, kind of this baby boomer generation where healthcare costs have skyrocketed. Cost of living has gone up, and just in general. So a lot of people have, for instance, my generation is almost 40 years old, have family and grandparents who are living much longer than, say, late 70s, early 80s, or seeing people live to 90s consistently, some into the hundreds. So cost of living has been increasing, and long-term care has come around where traditionally people think of long-term care as just, hey, my daughter or my son will take care. But long-term care is really having the protection for your loved ones who become ill,
right.
Who need help on a daily living. Think about nursing home or skilled assisted living, or having a caretaker who can come into the house to make sure that they're fed, they're able to go to the bathroom, they're changing clothes. If they have to go to doctor's appointments, they can go there. Or just someone who can come in and be a money manager, who can take care, make sure their bills are paid. One thing that it's really lost on individuals is if you need to take care of your mom, dad, or grandparent, aunt, uncle, that takes away from your life. Look, we all love, our family or friends, but at the same time, if your grandmother is 95 years old, does she want you to be taking care of her when you have your own children who are looking to go on vacations, go to soccer games, go to baseball games, go to, plays? So long-term care has become utterly important because, like I said, life expectancy is continue to go further and further out, 90, 100 years old. Long-term care is one of those things that I think everyone should think of, whether you are 35 years old or 80 years old. And as we all know, when it comes to the planning process, no one thinks of it and wants to take care of it until it personally affects them.
Until they're in the crisis, for sure. So what can long-term care cost?
Yeah, so long-term care, from a protection standpoint, when you're looking to put in an insurance policy or put a vehicle in to protect you, can vary. But if you look at the daily cost of long-term care, that can vary based upon state, based upon municipality, whether you live in a rural area or a city. But if you're looking at statistics now, nursing home, skilled assisted living, you're averaging about $100,000, give or take, a year. So if you boil that down to it on a daily, you're looking at $200 to $300 a day to have care. And that's really what has created a crisis on long-term care, because healthcare has become so expensive that insurance carriers have created new vehicles to help people protect themselves. So to get to that, to that arena, traditional long-term care used to be similar to disability insurance or health care just in general, where you paid a premium and if you needed it, you received a benefit. This day and age, there have become what are called hybrid policies, where insurance carriers have created a life insurance policy where you're able to attach what's called a long-term care rider on it. Right. So think about it, if you're a 35-year-old and your family has a predisposition for Alzheimer's or dementia or Parkinson's or any disease that can really greatly affect you, whether it's in near term or long term, you can get a life insurance policy that protects your loved ones but has a long-term care rider on there that if you need the benefit during your lifetime, you can spend down that benefit to help for those long-term care costs. And the second caveat to that is it locks in your premium. If the policy, policy designed properly. So what I mean by that is traditional long-term care policies, because the healthcare costs have gone up so significantly, you could say start at day one, pay X amount of dollars per month on that policy. And 10 years later, because your demographic, your risk pool has become such a burden to the insurance carrier that your premium could go up, a couple dollars, or it could go up a couple hundred, or it could go up, 6X. You don't know. There's that unknown. And as we all know, when you're getting to retirement, most people live on a fixed income. So the last thing you want to do is get a bill that says, oh, I was paying, let's just say $250 a month. Now they want $500 a month. For most people, that can be a burden to them. So then you have to make other changes to your living. So that the insurance carriers have realized that and come out with these solutions to help individuals protect not only their loved ones, but protect themselves.
Right. Now, this is something that I get a lot because, long-term care, depending on your age, could be a little expensive or costly. I've heard that before. And a lot of people ask themselves, doesn't Medicare or Medicaid help with the cost for long-term care?
So there's a lot of variables when it comes to getting assistance from the government. As we're all aware of, there's plenty of government programs out there, whether you are willing and able and healthy, to disabled, to old and unable to take care of yourself. So some of us may have friends, family, coworkers who have become disabled and try to get Social Security disability, and the struggle that comes. And it's similar to down the road when people are seniors who are looking for help, looking for government assistance, and they look to Medicare or Medicaid. Yes, they do offer assistance. It can be tough to qualify based upon assets that you may have, because oftentimes the government wants to see you at a certain, hate to say it, poverty level before they give you assistance. And what I mean by poverty is you could have $100,000 to your name. That, to your definition of unable to pay doesn't meet the government's, definition of being unable to pay.
Right.
Typically, they're looking for individuals who have less than $10,000 that are liquid to them. Think of like IRAs, 401ks, checking accounts, savings accounts. And then the other caveat to that is the benefits that you receive from the government when it comes to long-term care. Typically, they only cover certain types of care, whether that's nursing or skilled care, and then they might only cover you for a certain benefit period, let's just say up to 100 days. And then outside of those costs, they could be deductibles, there could be co-insurance that is still more expensive than one would want to pay.
Yeah, because there's a lot of people, and I get this all the time, they're like, wait a minute, Medicare does not cover for long-term care. And I'm like, no, it does not. It covers only a certain of those 100 days. So there's a lot of confusion about that. So thank you for clarifying that. Now, let's talk about, this is another one that people are very curious about, is the life settlements. And I have some knowledge about this, but in your words, what exactly is life settlements and how it can be used to help someone who's seeking long-term care for themselves or their loved ones?
Yeah, so life settlements, think of it as an asset that you want to take advantage of during your lifetime because you no longer believe you need the life insurance protection. So a lot of people say, well, I have a life insurance policy. It's not valuable to me because my kids are grown. They've been tremendously successful. I just had it because I wanted to protect my loved ones. So one way you can use life insurance if you qualify for a life settlement is to look at a third party where they will acquire that life insurance or purchase that life insurance for you for a value of cash. So think about if you have a cash surrender policy in your permanent policy, they might give you X amount of dollars over that cash surrender versus you continue to pay the premiums. Or you could have a term policy where if you're a business owner and you had it for a key man or a buy sell and you sold your business and you're transitioning, you might no longer need those policies, but that term policy is still valuable to someone to convert to a permanent policy. So the reason life settlements have become popular. You see commercials out there all the time for Abacus Life or SelectQuote or other institutions where they say, hey, we'll buy you policy for a certain amount of cash, is because long-term care. Cash is king, as we all know. And especially later in life, if you need liquidity to pay for healthcare costs, life settlement is a great way to, or a great avenue to explore to create some additional savings and funds to help pay those healthcare costs.
Right. Okay. Now, and I think this is a key question here. Can anyone qualify for life settlements?
Yeah. So life settlements, that is it's a little bit of a toss-up. And what I mean by that is it really depends on a case-by-case basis based upon the type of policy you have. And then obviously an individual who's sick or has a chronic illness is typically going to be a better candidate for a life settlement, because the person who's going to be acquiring that policy is looking at it as an investment. They want a return on what they're buying. But it's one of those that it's always worth exploring, especially if you're in the senior market, because your life expectancy is shorter than someone who's in their 20s and 30s.
Now, does it make a difference if you have a term life or a permanent life?
It does. It does a little bit. Like I said, there's different variables to each type. The term could be which carrier's with, which can lend to what kind of conversion options they have to the permanent policies. And typically the permanent policies are, does a premium need to be paid? What's the cash value? So there's variables to each scenario that, like I said, it's just always important to review, because you don't know what you have. Sometimes that policy can be way better than you think, or it could be crummier than you think.
Believe it or not, I get that a lot with people not knowing. Well, on the Medicare side, they're like, I have no clue what I have. I got it years ago, and I have no clue. And I think it also with life insurance, since we mentioned term and permanent, can you quickly tell us what is the difference between term and permanent for those that don't know the difference?
Yeah, so from a very high level, think of term insurance as you're renting it. So term insurance is popular for businesses and individuals who are looking to protect themselves at a very high benefit at a lower cost. Basically, the policy pays out if you were to pass away. During a certain period. Typically, those term policies are, say, 10, 15 years, 20 or 30 years. And at the end of those term periods, that coverage no longer exists. Versus a permanent policy is you pay a premium, and you're also creating an asset for yourself in a means of like a cash account. Typically, those accounts are tied to a general account for the insurance company, or tied to an indexed account, whether that's the S&P 500 or other indices out there. And the reason those are sometimes more of a leading candidate for life settlement is because of the cash value. Because you have something in there that is actually attainable, versus term, you're just paying for the death benefit.
Well, if you would like to learn more about the Secure Act, long-term care, life settlements, or the differences between term and permanent, or you're interested in converting maybe your term to a permanent, please reach out to Garrett, 215-283-1933. I do want to go over a few Medicare questions that I got this week, and I'm just going to go over them quickly because I know we're running short on time. The first question is, am I eligible for Medicare, but I want to stay with my ACA plan? Now, the ACA, their Affordable Care Act, can I just stay with it if that's what I like? So once you're eligible for Medicare, as of this year, I think they're allowing you to stay on that ACA plan, but be very careful because you're no longer eligible for subsidy if you have a subsidy. So before you continue on that ACA plan, make sure you fully understand what you're going to pay for your insurance moving forward. If you would like to learn more, you are welcome to call United Insurance Experts at 561-464-2273. My second question is, I recently enrolled in Medicare and chose a Medicare Advantage plan. Can I now sign up for a Medicare supplement? So typically within 6 months of your enrollment or your eligibility to Medicare, you do have a guaranteed issue. So you most likely will be able to get on a Medicare supplement plan if you choose to, as long as you're within that 6-month period. Again, you're welcome to give us a call if you have questions about that. My third question, this is my last question. I'm getting Prolia injection at the doctor's office and it's costing me a lot of money. I'm on a Medicare Advantage plan. What can I do? So I have multiple clients on these type of injectables, and let me tell you, they're very expensive. There's many ways that you can try to save money receiving these injections. One, talk to your doctor's office. There is certain ways that the doctor's office can bill for these medications, all right? Are they running it through your prescription drug plan, or are they using the medical part of the plan? So this is important. If you are taking Prolia, there is a helpline, and I can give you that number. It's 888-657-8371. Or one other thing is calling Medicaid, which is like an extra help. And I always tell people, look, it's good to just call and get your information. You never know, you might qualify. The number for them is 1-800-772-1213. Again, thank you so much for tuning in. And thank you, Garrett, for being with us today and sharing your knowledge.
Yeah, and Miriam, I appreciate the time today. One thing I would like to add to the Secure Act is utilization of life insurance when you're doing a replacement with your qualified monies, IRAs, 401ks. And the reason for that is life insurance has been around for hundreds of years. It's one of the things that's been a mainstay from a tax-efficient way to transfer money from one generation to the next. If you look at the biggest balance sheets, oftentimes there are Fortune 500 companies and banks out there that own the most life insurance. So like I said, it's one of the greatest assets that someone can hold in their balance sheet.
Wonderful. Well, thank you again, Garrett, for being with us today and sharing your knowledge. And thank you all for tuning in, and enjoy your Saturday.
Thanks for listening to Medicare Made Simple with Medicare Myriam and Tracy right here on Legends 100.3. Medicare Made Simple is brought to you by United Insurance Experts. For more information, call 561-464-CARE. That's 561-464-CARE. Tune in next Saturday at 9 a.m. for more Medicare Made Simple with Myriam and Tracy.